Okay, have we called this meeting a quorum?
We do have a quorum, so we can start a roll call.
Finance New Orleans Board of Trustees meeting roll call. Chair Edgar Chase IV.
Present.
Vice Chair Andronika Morris.
Present.
Secretary Treasurer G. Wade Wooten.
Present.
Board Member Giselle Johnson Banks.
Present.
Board Member Charles H. Brown. Board Member Stephen Smith. Board Member Hunter Thomas.
Here.
A quorum is present.
Thank you. Thank you all for being here at the Finance New Orleans Board of Trustees meeting, July 26, 2021. I'll start going down the agenda, starting with the old business. We have none. The next item would be on our consent agenda items. That's going to be the Finance Board meeting from June 28th, as well as the New Orleans Finance and Investment Committee meeting minutes from June 15th, as well as the Finance New Orleans Programs Committee's meeting from June 9th, 2021. And if everybody had a chance to go over those, and if there are no questions, I would entertain a motion for approval.
So made by Wade.
Second. Second.
It's been properly moved in second. All in favor, say aye.
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 Any opposed? Hearing none, motion carries. Moving on to item 4, new business. There's none there as well. So next would be moving on to agenda item 5, which is the Finance and Investments Committee meeting discussion.
Give me 1 second to pull it up. Okay. So with regard to the audit update, our staff been working diligently with outside auditors. Again, the audit process is still moving forward. The auditors are working through the review process, quality control checks, and escalations with regard to senior managers and partners at their firm. The finance team, again, is being responsive with regard to the questions and requests for follow-up. And so at this time, there's still no precise time frame when the preliminary financials and the audit will be prepared. We do have, we'd requested a 1-month extension through July 31st. And if need be, we can request additional extensions. Again, Byron and his staff will communicate any updates as they take place. And then if you roll to pages, I think it's 5 and 6 of the handout. The first part we'll focus on is U.S. economy updates there. So again, the economy still appears to have strong momentum. The market's keeping an eye on the spread of the COVID Delta variant, which obviously we're all monitoring closely. So any signs of a decreasing vaccine effectiveness or increased spread of the virus could drive volatility going forward. Despite the uptick in inflation, with the latest CPI showing inflation rose by 5.4% year over year, the Fed leaders still believe the increase is transitory and will normalize over time. Most of the CPI increases is largely driven by areas that are either affected by supply shortages, such as skyrocketing used car prices that rose the most, and areas that are tied to economic reopening, such as airline fares, hotel room prices, and that sort of thing. These categories actually make up for about 10% of the CPI, but account for 60% of the rise in prices. Turning next to the rates, market rates in the Treasury and the muni space have moved lower over the past month. The 10-year Treasury moved roughly 13 basis points to 1.30, while the 10-year muni moved down 5 basis points, trading around 0.84. Mortgage rates continue to track Treasuries, as one would expect, as it usually does, and moved lower month over month. Muni demand remains strong, as we've seen rates decline across the curve. And then locally, Orleans Parish's most recent published unemployment rates essentially unchanged at 11.2% in May, and it was 11.1% in April. But there is a significant improvement from April of 2020, which the rates were at 20%, which is obviously troubling. Turning to page 7, if you could, rolling to the financial status report. Let's see, I'm just looking. This page provides a comprehensive review of year-to-date revenues and expenses. Overall revenues, overall revenues year-to-date were $82,000 versus a budget of $168,000. The shortfall is driven primarily by multifamily income. The Finance Authority did not close on any pilot or bond projects in May. On the expense side, we're favorable to budget by about $160,000 year to date. Excuse me. With actual year-to-date expenses at $770,000. So it's primarily favorable in all categories, with relatively small offsets in year-to-date consulting and professional services, software and subscription, and taxes and insurance. If you move on to page 8, please. This page provides a 13th-month trend of our revenue and expenses. And what you'll see is revenues were slightly lower than the prior month, but within averages for the year. And then spending in May, the trend again is higher versus the prior month, but overall, no major swings or volatility on either side. Can you please advance to the next page, page 9, please? So this is the balance sheet year-on-year comparison. And again, the balance sheet composition remains consistent, and there's nothing material to report. Page 10, please. This is just a snapshot of pathways, revenues and expenses, with total revenues of 1,000 year to date and expenses at 21,000 year to date. Okay. Page 11, if you look at that, it's cash and cash equivalents at month's end. And our cash and cash equivalents were 10.3 million at April month's end, which is lower by about 113,000 versus the prior month at 10.4 million. So that, Byron, unless I'm missing anything, I think concludes the the finance and investment report.
No, you covered it.
Okay, thank you. Questions, comments, observations from the board or staff? Okay, thank you. Ed, can you unmute?
I'm on mute. Yep, sorry about that. We'll move then on to the Finance Programs Committee meeting or dashboard discussion with Ms. Morris.
Thank you, Chair Chase. Good afternoon, everyone. So we're going to jump right in to the program committee meeting and review that dashboard, as well as we have an item up on the agenda today. So The first thing that we're going to jump to is we're going to talk about the, sorry, 1 second. I'm getting another call in, and I got to put it to the side and get my notes up that for the program committee meeting so we can talk about this. Hold on, sorry. Apologies, I think it closed by mistake. There we go. Okay, so just as a quick overview, we wanted to talk about the Community Support Fund. No new awards. There's almost $50,000 remaining, and there's going to be a marketing campaign rolling out soon to talk about utility assistance. This is going to be important because one of the big areas, despite the fact that there's been LAHEAP funding for rental assistance, our understanding is that the Sewage and Water Board moratorium is going to be up soon, and there are significant arrearages for Sewage and Water Board amongst people who have not been able to pay for COVID. So once people know about it, we expect people to be coming in and eating up the last of that funding. Again, the staff is going to be trying to connect with people who could benefit from the Green Mortgage Program, and that kind of transitioned us to the next item. There was one origination under the Own New Orleans program last month for about $162,000, so it's not done yet. But that was the last bit of it. And so we're expecting the Green Mortgage Program to take its place. The staff are working with 6 potential homeowners so far, which is really good. And so we're hoping to see that program expand and offer homeowners and hopefully landlords the opportunity to make their homes energy efficient, reduce their overall costs, and have the added benefits of helping to protect our planet from climate change. Finally, we want to talk about the Sustainable Development Program. There are 53 projects in the pipeline. I think we have finally gotten the pipeline report where we need it to be. I will say, though, team, one thing that we have to talk about with the pipeline report is that it's oriented when you click on the link in a way that's not readable. So if we could fix that, we'd be ready to rock. There are, as you guys can see, overall, there are 53 active projects with 16 active applications pending, 1 new application, and the rest of those break down as 5 in pre-screening, 5 awaiting full application, and 5 full applications have been received and they're pending underwriting. So that is the highlights of the program committee report and the dashboard. Are there any questions from, and again, we would like to hear from everyone. I know everyone's not on today's meeting. So if we can go ahead and send the pipeline report once we make that last tweak to all the board members to ask them to review it to make sure that we've gotten everything and we can rock and roll. And so, yeah, that's what it's a little tough to read. And as a reminder for everybody, we will be getting this as a link because we want something live and up to date. The staff are going to be updating this, so it won't be something, it'll be included in every packet, but it won't come as a PDF or anything like that. That for us, it will be a live link. That way we can keep track of what's going on and be assured that when we look at it, it's the most up-to-date information that the staff is ready to share and has on hand, instead of which version is it and which one are we looking at? It's that one. But the way it's set up right now on the live link, it needs to be shifted a little bit so it's readable. But unless we have any questions.
I just have one. I guess the question is so we didn't have any closings last month. Is it just that like they're all tending to take a little bit longer? I mean, because clearly there's a number in the pipeline. Is it that they're taking longer or certain ones or types are taking longer? I'm just curious.
Yeah. I mean, the staff can talk about a little bit more about that, and that's about how complex these deals are. And the one we have on the agenda today isn't even a full closing. So if anybody wants to, Damon or you on the team want to talk about complexities of these deals and how we can expect them to start moving?
Yeah, thank you. The multifamily side of our operations, or sustainable developer, as we call it, the deals will happen at an uneven pace. It'll be very transactional. They're going to come in different sizes, different deal structures, different developers with a variety of years of experience. So, in trying to sort out this pipeline, the staff has tried to find as many commonalities as possible. That's what's outlined here on this matrix. But in terms of just the ongoing nurturing of these projects, a lot of it is beyond our control in terms of when these projects are going to close. Many of the developers, have different closings set for different reasons, and we try to accommodate those developers in their closing needs. So we don't set the closing dates, but we all, it's also important that we do as much as we can to help those developers meet those closing dates. So there are some things we can do, but much of it is beyond our control. So that's why it's important for us to have such a wide pipeline, and we're constantly in the process of trying to refresh and update the pipeline that you see before you, because not all of the projects have active applications, but there are deals that we know about and we're in communication with developers about. So it's just going to be an ongoing process. And once we develop a rhythm and add a few more elements to our platform, our sustainable developer platform, I think you'll see more efficiencies and more predictability in terms of the number of deals we can expect on an annual basis. We're not quite there yet in terms of having that financial infrastructure, but we're making moves towards being able to efficiently predict and support projects, to the tune of 3 or 5, whatever that number is going to end up being. We know what we're going to have, and we can also put revenue so you can understand the financial sustainability of it all. So a little bit of a long-winded answer, but as Board Member Morris said, it's very complex, and we try to simplify it as much as possible.
Thank you.
Any other questions? So the next item, we actually have the program committee voted and reviewed an item for a resolution that we want to present to the board, and have staff really present to the board about one of the items on the pipeline report, a project in particular that kind of perfectly demonstrates the hurry up and waitedness of this endeavor that the Finance New Orleans is taking on. So Damon, I'm going to turn it back over to you to talk through this deal in particular. Just as a note for the rest of the board members, the program committee did meet and is recommending approval of this resolution to the full board. But we do want to make sure that the team does make a good, robust presentation to all of you, so you can consider it as well.
Thank you. And also, we're going to have Wayne Nephew, Butler Snow, join. He's bond counsel on this transaction. So he'll say a few words about the deal and explain the process that we need to go through in order to move this through to the finish line. But this project is our first bond approval under our Sustainable Developer Program. It's a $35 million multifamily housing revenue bond issue for the Christopher Holmes Apartments. And the Christopher Holmes Apartments is on the West Bank of New Orleans and Algiers. And it's being developed by LDG Multifamily LLC. It's an experienced developer with a substantial balance sheet. And I'm sorry, I lost my place on the slide, but it's a developer with very experienced, much experience in the affordable housing arena, and has developed these projects in other parts of the country. So we're providing not only the pilots, which we've done for 3 projects so far, we're also providing bond financing for the deal. So the developer is the the developer is coming to us for this financing, which also includes funding from the city of New Orleans and other entities, which the complexity that Board Member Morris talked about, it can be seen in this deal as well as many others. So there are going to be multiple sources of financing that come together in order to make these projects happen. But on a higher note, Finance New Orleans has done bond issues in the past, of course, for multifamily. Hasn't been done necessarily as a part of a formalized program. So as a formalized program, we're excited to announce this project to you because we expect that we'll have more, as you see in our pipeline. So we're going to have to go through some trial and error on this particular project, but we do have experience, of course. I'll turn it over to Wayne Neville in a moment, but yeah, he's led us through some bond issues in the past. So I feel confident that we'll be able to execute successfully and set a foundation for the other projects that we have in the pipeline. So at this moment, I'll turn it over to Mr. Neville to talk more about the details of the project, and then we can get into some questions from the board if there are any. Did we get Wayne on the line?
We actually have Joshua Haston on the line.
Okay, so Mr. Hastings is from the LDG Multifamily LLC development entity that I just talked about, and he can provide more details about the project. Is he ready to speak, Naj?
Yes, I'm on the line if anyone can hear me.
Yeah, we can hear you. Thank you.
Okay, thank you. I've got a presentation to share, and I'll share my screen real quick. So this is a presentation that I shared with the underwriting committee back in March. So I'll try to zoom through it pretty quickly. I know you guys are busy and have other agenda items. But my name is Josh Haston with LDG Development. We're a workforce and affordable housing developer based in Louisville, Kentucky. I am actually based in Nashville and run all of our development deals for the state of Tennessee and Louisiana. So just real quickly, what you'll learn in this presentation is a little bit about us, about our proposal, and kind of what we have in store with FNO or Finance New Orleans, assuming you guys approve us today. And all these pictures you see in the presentation are actually from other developments we've done. But our mission is, by and large, is we believe that everyone deserves a quality place to call home. And so when we do any project, we want to make sure that we're bringing that throughout the whole process and creating a really vibrant community that is affordable for the long term and really benefits the at-large community, not just the immediately surrounding community. And so for this particular project, it's in Algiers, the former Christopher Holmes site. And just real quick about LDG is, as Mr. Burns mentioned, we're fairly large and have a strong track record. Here in New Orleans, we developed the Muses apartments following Hurricane Katrina. And this is as well as another 1,500 units across the state of Louisiana and over 17,000 units across the rest of the Southeast. We're also concurrently working on a project in District D that, assuming this goes well, we'll likely bring to you guys as soon as we can, also in New Orleans. But this particular project, again, I said, is in Algiers. So on the West Bank, former Christopher Holmes site, and it's about, I think, 9 or 10 acres off of Vespasian Boulevard, or Vespasian, I'm sorry. The project itself is a mixture of apartments and townhomes, and all the apartments are 3 stories, and the townhomes are 2 stories. as well as improving the actual site, which is vacant as of now. We'll be improving the infrastructure around it, as well as improving stormwater resiliency and adding back tree canopy, and improving safety throughout the neighborhood, as well as further catalyzing economic development on the West Bank. Like I said, it's a mixture of apartments and townhomes. There's also a clubhouse that includes a business center, fitness center, and community center, and then a playground for the tenants of the apartment complex, or the tenants of the complex, as well as it's accessible to public transit. I think there's 2 transit stops on both the north and south side of the site. So we're trying to make sure it's a great project all around. Again, a few more pictures. Going along with FNO's sustainability program, we want to make sure that we're building sustainably. So this site will adhere to the Enterprise Green Community Standards, which is basically Energy Star certified on steroids. So that makes sure that all of our tenants are they have energy efficient apartments and Energy Star appliances throughout, but also with the Enterprise Green that provides, I guess, more energy efficient sites in general. So that's beefing up the stormwater resiliency requirements. We know that New Orleans has an issue with stormwater and flooding, so we're trying to build a great site that can deal with that, as well as additional bike storage. Here's a couple of sketches of what the units will look like. The designs have been submitted to New Orleans Permit Department, and they are reviewing them as we speak. So again, the multifamily will be 3 stories. There is 8 multifamily buildings. 7 of those buildings, or there'll be a mixture of 1s, 2s, and 3s. There's 24 1s, 84 2s, and 84 3s. And then separately, there will be 12 3-bedroom townhomes. Here's a look at the townhomes. And then a couple more renderings for you guys. General timeline, like I said, we've done community engagement. This project was actually awarded to us through FNO. FNO had an RFP back in 2018. We applied and were selected. Since then, we've done numerous community engagement activities, as well as applied for CDBG funds twice successfully through the City of New Orleans, and then additionally for project-based vouchers through FNO to cover 25% of the units. We have started the permit process and are working through the entitlement process again as we speak. And the plan is, assuming we get approved for tax credits and bonds, and to start construction sometime this fall or late fall or winter. A project this size will take about 2 years to develop in its entirety. But the way that we develop those is we turn over 1 building at a time. So from the construction start date until we start leasing is around 14 months usually. So that would put us at leasing fall or winter, probably winter of 2022. And then with construction completion in 2023. Kind of spoke to this a little bit, but we like to build communities that are serving a broad spectrum of incomes, not just 100% Section 8 or 100% affordable. And so the breakdown here is we've got 25% project-based vouchers, again, serving 1s, 2s, 3s, and townhomes, importantly, as well as some 60% units and 80% units, and around 5% of the units serving market rate. So again, we want to have that broad spectrum that we know is going to improve not only this site, but also the vibrancy of community around this site. Just to look at the sources, this project will be using a 4% LITAX, or since we're low-income housing tax credits. We have submitted that application to the state agency, LHC, in Baton Rouge, as well as addressed, I think, the majority of their comments. So I think we should be on their approval any day now, hopefully. And then we've going through with FNO for tax exempt bonds, issuing up to $35 million, as well as the pilot. And then again, other sources that we've gotten include 2 rounds of CDBG funds from Office of Community Development in New Orleans, vouchers. And then Hano is also issuing a land loan for the value, or 80% of the value of their property. And then we are also deferring some of our developer fee as well. So it's a lot of sources in there, a very complex project, but we have a successful track record of doing that. Look at some of the uses, and this is very broad again, pardon me. We have an appraisal that has land at $925,000, and we're expecting around 24.8 million in hard costs and 5.8 million in site work costs. That's improving all the infrastructure on the site, as well as driving additional piles, because New Orleans has some sandy soil. And then additional other costs tied to financing. So an all-in around $53.7 million in total costs. So pretty substantial project. And with that, I will cede my time and allow you guys to answer any questions you may have. Thank you.
So I will share with the full board some of the questions that the program committee came up that some of them have been addressed in here. One big question that we talked about was the right to return, because the site wasn't fully emptied until after Katrina. So people were returned there, and there were some people who got relocation opportunities because it was a mixed use site. It had homeowners as well as renters there. And Josh and the team have said that they have not finalized that yet, but they have committed, because we raised that as an area of concern for us, giving the residents who were there before the site finally closed the chance to return, and they would look at whether or not they could do that working with the housing authority. It's a fairly straightforward process, and it's not that many residents. And I think that's the one thing that is probably missing from this presentation, Josh, is how many residents were there. How many renters were there when the site was finally closed? And so if y'all can make sure y'all have that for the next one, so you guys discuss it with the housing authority, and this deal isn't finalized yet, but we want to fire the starting pistol is what we're talking about today. And is Wayne here to talk through the mechanics?
If he's not, I can talk through the general mechanics. Again, given our experience with this sort of transaction, with this type of financing, the IRS requires at least 50% of the capital stack to be covered with tax exempt bonds. Those bonds typically serve as depending on your debt product, they serve as a form of construction loan to collateralize a construction loan or permanent loan. And so with this particular transaction, we are planning on a construction to permanent loan where the tax exempt bonds will collateralize those. And so with these projects, again, you kind of bake in a little bit of cushion. So we're asking for up to $35 million in tax exempt bonds, again, to hedge against anything crazy that happens in construction. And then that at full lease up would convert immediately to a permanent loan that would be 40 years on a project. So a 40-year permanent loan. But with those bonds, so if you approve us today, FNO or Finance New Orleans would then submit their bond underwriting package to the State Bond Commission in Baton Rouge, where it would be voted on and again, hopefully approved. And then we would come back to FNO's board for final approval to issue those bonds right after we close. And so that would be the general timeline.
So Trustee Morris, this is Jade. Can you hear me?
Yes, I can hear
You
you.
guys hear me? Okay.
Yes.
Just to expound on that, the resolution that that you have before you is what we refer to as an inducement resolution. It really is the thing that kickstarts the process. For clarity, and I think it was just noted that this is not the last time that you will see this project come before you. This is literally a preliminary approval. And when I say it kickstarts, it does a couple of things. It triggers the developer's ability to, along with FANO to start the application process with the Louisiana State Bond Commission. It also triggers, which is a requirement for us, our ability to put out it serves as a notice of intent to issue bonds. It also, in which we do that in a number of ways, but also through publication in the official journal, which is required by law. And so, again, this is a preliminary resolution. There is still a considerable amount of review and underwriting that has to take place between now and the time that this comes back to you for final approval, which includes this project having a public hearing, which will be an opportunity. And we do this even with our projects that are pilot only, where there's no bond issuance, but it also triggers the public hearing for this project so that the public and other stakeholders can weigh in on the project. So you all will have, that you'll have that exposure to understand how others are feeling about the project. So this inducement resolution is just the beginning, but it does allow for a number of different processes and procedural points to take place. So I don't know if that helps, Trustee Morris, on your question on kind of, the process, but that's what the resolution is that is before you.
Thank you, Jade. That is what I was looking for. I did want to make sure that not being a lawyer, only watching them on TV, I did want to make sure that that was being adequately covered and explained. Thank you.
Yes, ma'am. Yes, ma'am.
So Chair Chase, I will turn it back over to you if there are no other questions for the program committee and staff on this issue.
Thank you. And hearing no other questions, and thank you for that point of information, Ms. Russell, because that certainly lets us know, and all the board members and everybody on this call, that there are the safeguards in place. This resolution is just really that starting point to kick off this process for this Christopher Holmes project. And there's a lot of safeguards along the way before the final approval. So I don't have any further questions. I'm excited to see that the sustainable project is continuing to move forward with great projects, that we do have 6 people in the pipeline for the Green Mortgage project that really just kicked off within the last month. So that's exciting.
Right.
But if there is no other questions or discussions, I think I would entertain a motion for this resolution for approval.
So moved.
I'll second. This is Giselle.
And Mr. Chair, I would recommend I would recommend on this particular resolution and resolutions like it going forward for bond issuances, I would recommend that you do a roll call vote.
Okay, well, let's do that. Am I going through the list of names, or is?
I can go through it if you like.
Okay. Yes, please.
Chair Edgar Chase the fourth,
Yes. Approved.
Vice Chair Andronika Morris,
Yes, oh, in favor.
Secretary Treasurer G. Wade Wooten,
Yes.
Board Member Giselle Johnson Banks,
Yes.
Board Member Hunter Thomas.
I vote in favor.
And then we have Board Member Charles H. Brown and Board Member Stephen Smith, who are not present with us today.
Right. Seeing that we have a majority of the vote in favor of the resolution, it's approved.
Thank you.
Thank you, everyone. And just a few more words before we move on. Again, this is a big moment for Finance New Orleans and the city. This program, so the Sustainable Developer Program, is starting to come together. We're attracting high quality developers like the one we just heard from. And it's something that we have to build our process around. We have to learn how to repeat this and execute this same thing we're doing now over and over again. So this is the first of what we hope are very, very many approvals for the city, for this program, because it'll mean positive impact for our community. And it's what we want to see in our strategic plan and this $1 billion community impact goal that we have. This is exactly what we mean. So thank you to the team for getting us to this point. Thank you to the board for supporting. Thank you to the community for supporting these efforts and supporting our vision to help physically transform New Orleans. And thank you to our strategic partners, our business partners, like Mr. Haston online, Mr. Nephew, and other consultants who help us do this work every day. So we're really excited. We still have some work to be done. This is not a closing by any means. We have to get through a few more stages. So we're going to keep working through those complexities, but we should stop and reflect at this moment because it's taken us a very long time to get here. And this is, it marks a very bright future for us, for the city, but we have to keep doing the work. So thank you.
Well said, Mr. Burns. And I think after that, we're actually going to move right back to you with the executive management report.
Okay, thank you. Naj, do you have the email that I just sent to you? Naj, are you there? All right, I'll go.
Just give me 2 seconds. It's loading now.
Okay, thank you.
You're welcome. Oh. All right, I just, hold on.
Oh my God. All right, finally. My apologies for that. Um,
Naj, I can share my screen if you're having trouble uploading.
Because it is taking forever to come on.
Yeah, let me share my screen. Hold on.
All right, thank you, sir.
All right, can everyone see my screen?
Yes.
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 Okay, thank you. Well, I'll go over the table of contents very briefly. I'll cover some news and highlights, strategic plan status update, and a review of our strategic plan scorecard. There haven't been many changes to the news and highlights from last month. There was some pretty good news that we started receiving last month with the launch of our green mortgage program, as well as some advancement in the national conversation about financing green infrastructure bank and how that money is going to flow into communities. Finance New Orleans has been identified as a distribution point for capital. That's a part of our mission. So we've been working with the American Green Bank Consortium, City Hall, other associations about being in a conversation so that we can help New Orleans take advantage of this capital that's going to start flowing into communities across the country. And this is really a very rare moment in the lifespan of an organization, at least certain life cycles of an organization, where so much money is going to be spent by the federal government, by state governments, local governments. So we are in a moment for sure, and we need to be prepared to take advantage of that moment. So that's why we've been working with City Hall and also working with potential investors who can help bring us the capital needed in order to execute our strategy to make a $1 billion impact by 2030. In order to make that $1 billion impact, there will be internal capital, city capital, foundations, community banks, individual investors. We're considering all possibilities in terms of bringing in necessary funding. So just like the developer project that we took a look at, and it had those multiple layers and sources of financing needed in order to get those projects done. Well, it's the same thing for us on a macro scale, which is that there are going to be multiple sources and different creative arrangements we're going to have to figure out in order to execute the overall goal. I do think these types of things will be easier in the future once this new market is more defined, but we're at the very beginning of it. So we're going to have to do a lot of the work to define it. So we're going to continue our work and pulling all those pieces together. And internally, what that looks like is a strategic plan status update that you see in front of you. Again, not much change from last month, but I did cross out some of the completed items so that you can see specifically things that we're working past. And next month, you'll see a refreshed list with the items that we're working on for the remainder of this year. And again, this is a 2-year business plan, and we're in the first year of it. So this is a running list that we have for 2 years. So we'll add priorities as necessary and as others come off. But a couple of highlights from this list: we've completed an employee training program, or started one at least. We did a formal training with the New York Green Bank, New York City Energy Efficiency Corporation, which is a local green bank in New York City. They've been around for about 10 years, and their staff is starting to do trainings for our staff on how to be an efficient green bank. So that was a very productive meeting. And then we also have other types of trainings that staff are starting to participate in, from trade associations and one-off type of opportunities that come up. So that program is in swing. Also, we executed the Resilient New Orleans Resolution in May. We've developed a pandemic policy and office strategy for working during and around the pandemic. So that's an ongoing process, but we did put together some basic policies and infrastructure in order to manage ourselves in these times. Also, our investor relations website launched. There's still a little more work to be done there, but we'll keep advancing. And our green mortgage program launched, of course. And lastly, this is a snapshot of the scorecard. Not many changes here outside of the cash and equivalents. We're at 10.2 million at the moment in net assets. So, we're using that as a strength, or talking to the potential investors about our net asset position, about the fact that our balance sheet is starting to grow again. We just need to start adding a little more fuel to the fire. So that's a snapshot of what's going on internally. We'll keep advancing the work and provide a refreshed update as we move into the second half of the year. Any questions from the board? Thank you. Well, that's it for me.
Thank you, Mr. Burns. Always good to see as you tick off that list of the action items. And what I got from that was really building that foundation for us to continue to grow and to continue to do these projects that we want to do. So I'm excited to see a lot of this finally coming online. But also, more importantly, is we have that foundation to manage the growth that we see that will come in the future. So great work to you and the team and everything that you all continue to do.
Yes, sir. Thank you. We appreciate it.
All right, we'll keep moving. There's no executive session. There's no other business. Do we have any public comment?
No public comments at this time.
Here, no public comment. Our last item is adjournment. I'll entertain a motion for adjourning.
So made by Wade.
Second, Giselle.
It's been moved and properly seconded. All in favor, say aye. We're officially adjourned. Our next meeting is August 3rd, 2021.
All right.
Thank you, Chair Jade.
Thank you all.
Take care.
Thank you, everyone. Have a
Thank
good
you.
day.